My name is Gracie Perez. I have a mortgage team here in Dallas, and today we're going to be talking about refinances. And today I invited Mike. He is part of my team and he's an expert when it comes to refinances. Mike, let's talk about refinances. How long have you been doing refinances?
I've been strictly doing refinances only for, I would say, the last 6-7 years. During that time, I would say I've originated just under my name, close to 1,000 refinances.
Tell me a little bit more. What is a refinance and what would you recommend it?
Absolutely. So just to kind of give you the basis, refinancing is really what it is, right? You're refinancing your existing loan and you're doing it for a benefit, right? You're either going to look to lower the interest rate, you're going to look to take out some equity, which you can use to pay off debts, for education for your children, for any investments that you may have coming up, or if you just need emergency money to be put in the bank. Another thing you can do with refinances is change your term and reduce your term as well. So one of the benefits now is that, rates are actually going down, and we foresee that rates are probably going to start going down into 2025 and into the future. With that being said, everybody who purchased a home, I would say in the last couple of years, they're anywhere in the 7-8% interest rates. They're going to be the ones to benefit when the refinance boom. It's actually starting now. So for those who have 7-8% interest rate, definitely now's a good time to at least contact your lender and see what options might be available. That way they can show you what your potential savings would be. If you have debts, we can look at paying those off within the same refinance as well. So there's a lot of different benefits to it. Just a matter of just giving us a call and we can show you some different options.
Let's say that I closed on my home a year and a half ago. My interest rate is 7.5%. And me as the buyer, as the home buyer, I'm thinking, man, do I really want to go through that refinancing process and go back to a 30-year term? Do we have options to give to our clients if they don't want to go back to a 30-year term?
Absolutely. What we can do, since we are a broker, we've got lenders where we can do not the traditional 30, you can choose any term. So let's say you bought your house last year, you're 1 year into your mortgage, you have 29 years left. We have a lender where we can do a 29-year mortgage for you.
Okay.
And you can keep the exact same term, or you can even reduce it. I would imagine you have a 7.5 now. Let's say we get you down to, let's say a 6, low 6 is 6.25. We could maybe even reduce the term possibly to a 20-year, keep your payment the same or lower, and you actually end up saving more money in the long run. Because as you know, Gracie, interest over the long term, over a 30-year period, you end up paying a lot of money back to the bank. And we definitely want to try to avoid from doing that. And so a refinance can help you do that by lowering your term, lowering your interest rate, thus lowering the overall interest that you pay back to the bank.
Have you seen any clients that in a few cases that I've had families, they have a really low rate, which the ones that bought around COVID took advantage of the 2%, 3% rate, even 4.5%. That's still a great rate. But they're trapped into the rate and they're accumulating credit card debt, auto debt, student loan. What would you say to those clients that do not want to let go of that average 3.5% to 4%, but they're paying a high interest rate on credit cards and their credit score is dropping because now their utilization is high?
Yeah, so that's that's a situation where, paying off debts is one of the main benefits of doing a refinance. Like I said, I did refinances strictly for 6-7 years, only refinances. And the majority of our refinances are customers with significant amount of debt. Those are the customers who stand to benefit the most.
Yeah.
What we can do is, let's say you have a credit card. Credit cards now are 29% interest rate. If you have a $50,000 credit card that you're paying a lot of money in interest, let's say you have a car payment. Car payments are a lot. Although the interest, may be anywhere from, right now, I think the rates are maybe 5 to 8% on cars. Because the loan term is shorter, that payment is significant. So if you're struggling to make your payments every month, credit card payments, mortgage payments, to live, eat, things like that, definitely just give us a call, because yes, you are in the 2% and that's a great interest rate, but what's that 2% doing for you now? It's not saving you money now. So at least let us take a look at it. We'll structure up some options for you and show you exactly how the scenario would look. That way you get an idea, black and white exactly. Okay, if I do this refinance and pay off all these debts, I can save X amount of dollars per month. Right? And that X amount of dollars that you're saving per month, it could be hundreds, even close to thousands or even more. I've seen that firsthand. Let's say you're saving $1,500 a month, cash flow every month. Even put half of that money back to your mortgage, and then you're going to be paying that mortgage off in less than 30 years if we go back into a 30-year.
You said something that is very, very true, and I do agree with that. Sometimes that low interest rate on that mortgage that you got 3-4 years ago is costing you money. In your head, you're thinking you're saving, but in reality, because you have to live, you have to keep on going, right? Like, we're not promised tomorrow, and the world doesn't stop. And so that low interest rate may be costing you a high interest rate on other things. I do have a love and hate relationship with home equity lines of credit. A lot of clients do ask about them. HELOCs, I have a love and hate relationship with that type of loan, and here is why. Once you take out the money, you're basically stuck. Let's say that you take out $50,000 on a HELOC through your local bank. And so now you have your primary home under a 3% rate or even 4%, but then you have $50,000 at 10 or 11%. What is the plan to pay back the bank the $50,000? They're charging you every month interest only.
Right. So
you're only paying down the interest, but you have that $50,000 that you owe. I mean, it's not that easy to save $50,000. So that's why I have a love and hate relationship with home equity lines of credit, because of that reason. It's hard to pay it back. At the end of the day, you end up paying that interest to the bank, and you are forced to refinance so that you can consolidate the first and the second loan.
You're right about that, Gracie. Home equity line of credits, they have their benefits, but it also has its drawbacks. Here we'll look at all the options for you, and we want to make sure we put you in the best option for you and for your situation. If it's going to be a home equity line of credit, then I'll tell you that's going to be your best option. But more times than not, if you have debts that we need to pay off, the refinance of the loan and including debts in that refinance, we call that a cash out refinance. That's most times than not going to put you in a better situation than taking out a home equity line of credit. So, like I said, every situation is different. It's best to just give us a call, and we'll work with you to show you the options on what different scenarios look like. That way you have the information you need to make an educated decision.
So there's two types of refinance, the traditional way,
right?
Which is?
We've got the traditional rate and term refinance. That's just, hey, I've got a high rate, I want to get into a lower rate, save some money. That's called the rate and term refinance. Not taking out any cash, not taking out any equity. And then we have what's called the cash out refinance. Cash out refinance allows you to take out equity from your home. You can use it towards paying off debts, student loans, car payments, or if you just need a lump sum of cash. You've got some flexibility with that. And so those are the two different types of refinances.
Yeah. Do you have any special programs for refinances with FHA or VA?
I'm so glad you brought that up. Actually, we do. So for everyone out there who's purchased a home in the last 2 years, I know they're in either a high sixes, even higher, up to 8% interest rates. And then for those borrowers, I just want to let you know, refinance is different from a purchase in that when you guys purchased the home, you had to make the down payment. you had to pay for the closing costs, and you brought a lot of money to the closing. With refinances, you bring no money. You don't have to bring any money out of pocket. So just keep that in mind. I think a lot of homeowners, they think, oh, when I bought the house, I put 10,000 plus down, to buy the house. But doing a refinance, do I have to do that again?
Yeah.
No, you don't actually. So we'll work up those options for you, show you that you don't need to bring money to the closing. You just basically, we work up an option where either if you want to rate and term and just lower your rate, we'll show you that option. If there are debts that we want to take care of, we'll show you that option as well. And then we work it up. We submit the loan into underwriting. We get the conditional approval. We get sometimes we'll get an appraisal done, sometimes not. And then we'll get to the closing, and then we close, and then you either get to skip 1 or 2 months payments, get you another breathing room for 2 months to kind of get you back on your feet.
Yeah.
Now, going back to your original question regarding the FHA and the VA loans, those are great products, and I'll tell you why. They have a product or a program called Streamline. What a Streamline allows you to do is they do not allow you to roll in any closing costs into the loan, and you have to lower the rate by a certain percentage as determined by the investor, which is either going to be FHA or VA. A lot of times you don't need to do a hard credit pool, which it doesn't impact your credit score. We can just do it with a soft credit pool, which is good for you. You can preserve your credit. So a lot of different options, especially if you have a VA or an FHA loan. I would say definitely give us a call. Let's look at some streamlined options. Start saving you some money now. We'll save you on the rate, and then you'll get to skip a payment or two, save you a little bit more there.
On top of saving on the rate, on top of consolidating debt, on top of reducing your monthly payment, you also get a refund on your escrow balance, right?
Yes, you do. So you do get a refund on your escrow balance. You will get that back. But I will say this. A lot of people think, oh, that's extra money. And it can be. But just to be safe, I would say hold on to it. Because after you do the refinance, what's going to happen is, okay, we do the refinance. We build up your escrow account into the new refinance loan. And then you start paying. But there could be a chance. Well, remember, I've done refinances for like 6-7 years. So I've experienced this with a lot of the customers. They'll call us back and say, hey, I got a call from the servicer and they're saying my escrow balance is short. And I have to either fill it up and pay it lump sum, or they're going to prorate that amount over the next 12 months. So my payment's going to be a little bit higher to cover that deficit in the escrow balance. So when you do get that refund, I would say hold on to it for a little bit, contact the lender or your servicer and say, hey, I just want to make sure the escrow balance is good. It's called an escrow analysis. So you can call the servicer and say, hey, can you do an escrow analysis to make sure we have enough funds in the escrow account so that I'm not short? And then if they do it and you're short, you've got that refund to fill it up. And then whatever's left over, that's extra money in your pocket.
To summarize the importance of a refinance, the process is the same. We close in less than 25-30 days. You don't need a realtor to refinance. You have to deal directly with the lender. We will take care of the client. What else? What else do you want to mention that's important?
Well, as far as refinances go, it's a much smoother, easier process. You're not having to move. You're not, having to plan all of that. And so you're already in your home. You're already working. You already got your life. You've got everything going on. And especially now, back to school, everybody's so busy. Just give us a call. We'll work up some options for you, and you'll realize how smooth and how easy a refinance is going to be. And we can probably get it done even within, if it's a good, very easy refinance to do, maybe even 2 weeks.
Let's talk about PMI. Can I drop my PMI if I do a refinance?
Absolutely. Now, it's not a guarantee. How that works is you have to have enough equity in your home to be able to drop off the PMI. Typically, it's going to be 20% equity in the home. So let's say we do the refinance and then we determine that we have equity based on the appraisal. Then at that point, we work up a scenario removing the PMI, saving you a few more $100 per month. And then you get a new loan without PMI. So for those of you who are in an FHA loan now or in a conventional loan with PMI, definitely let's look into that, because if you did build up some equity over the last couple of years into the home, very likely that you could have the equity now to where you don't need to have PMI in your loan.
And the PMI is the private mortgage insurance that protects the lender in case of a default on the loan. So we can remove the PMI when we do the refinance to drop your payment so that you stop making that payment and save you money.
Absolutely. Yes. The PMI, the way we explain it is, has no benefit to the borrower. It does nothing for you. It just protects the lender. So if at all possible, if we can try to remove it, that's the goal. We're going to always try to look for a way to remove the PMI when we do a refinance for you.
The goal of a refinance is to save you on the rate, drop your rate by at least 1 point, to drop the PMI. Hopefully you have enough equity. This is determined by the comparables around the area of the recent homes that have sold within the last 12 months or so. And this is also determined by an appraiser. If we get an appraisal waiver in that system, then we save the buyer $700. That's basically some of the ideas that we have when we're talking to a buyer when it comes to a refinance.
Absolutely. Yes, it's, at the end of the day, Gracie, you and I are both in this business. It's all about taking care of the customer, making sure they get a benefit out of the refinance, saving them money, putting them in a better situation overall. And that's why I love doing refinances. Right? The past couple of years, it's been tough in our economy. People are working 2-3 jobs just to make ends meet, right? They're racking up debt. And I'm sure by now, everybody's maxed out on their credit cards, So if that's you, give us a call. I mean, we've all been in that situation before. We understand the situation, and we're here to, stay by your side, hold your hand through the whole process, make sure you understand everything, give you all of the options, and just put you in a much better financial situation.
Absolutely. Thank you, Mike. I appreciate your expertise in the refinance department.
Absolutely.
Thank you so much for watching. We will see you on the next video. If you have any questions regarding refinances, don't hesitate to contact us. You can also visit my website at gracieperez.com.